All right, let's talk about trading. You know that moment you hit buy or sell? It feels so simple, right? Just a click. But have you ever really thought about who's on the other side of that trade? Who are you actually trading with? Well, today we're pulling back the curtain to find out. Let's dive in.
Seriously, just picture it. You're on your app, you see a stock you've been watching, and bam, you hit buy. And just like that, the order's filled. It feels instantaneous, almost like magic. But it's not magic. You're buying those shares from somebody. So the real question is, who is it? So in our last explainer, we talked all about the big leagues, the major indexes like the S&P 500. Think of that as the stadium. Today, we're heading down to the field to meet the actual players. We're going to look at the 3 key groups that make every single trade possible.
And it only makes sense to start with the player you're probably most familiar with, because, well, it's you. Let's talk about the retail investor.
Yeah, retail investor. That's just a fancy industry term for a regular individual investor. Basically, if you're buying stocks, ETFs, whatever, for your own personal account, and not on behalf of some huge corporation or a bunch of clients, congratulations, you're a retail investor.
So, what gets us into the market? Our motivations are usually pretty personal, right? Maybe we're building up a retirement fund, trying to grow our wealth over the long haul, or maybe we just plain believe in a company's mission and want to be a part of it. Some of us might be in it for shorter-term trades, but the bottom line is, it's all tied back to our own personal financial picture.
Okay, so that's us, the individual investors. But we're not alone in this market, not by a long shot. Now it's time to meet the real heavyweights, the giants. We're talking about institutional investors.
Right, so an institutional investor isn't one person. It's a whole organization. They're like a giant financial mothership, pooling enormous amounts of cash. We're talking billions, sometimes trillions, with a T, and they invest it for other people, whether that's clients or members. And who are these big players exactly? You've definitely heard of them. It's the pension fund managing your old teacher's retirement. It's the big mutual fund company that your 401k is with. It's hedge funds making those super complex high-stakes bets. Even insurance companies, they invest the premiums you pay. And yep, even massive university endowments. These guys are the whales in the market ocean. And this right here, this really puts the difference into perspective. It's kind of mind-blowing. Look at trade size. As a retail investor, you might buy what? 10? 100 shares? An institution is trading millions of shares at a time. And their goal? It's not about their own personal wealth, it's about getting returns for their clients. Plus, while we're using public websites and apps, they've got entire floors of analysts and supercomputers. It's a completely different league. Okay, so we've got us, the individuals, and we've got the giants. But wait a minute, who actually connects the two? How is it that every time you want to buy, there's instantly someone there to sell? That's where our third, and maybe most important player comes in. They're kind of like the hidden engine of the market maker.
The best way to think about a market maker is like they're the ultimate shopkeeper for a specific stock. Their job is to always have that stock on the shelf to sell to you and to always be willing to buy it back from you. This creates liquidity, which is just a fancy word for making sure trading is fast and easy. Seriously, without them, you could put in a sell order and wait hours, maybe even days to find a match. It would be a total mess.
So how did they pull this off and make money? It's a really simple but brilliant 3-step process that happens in the blink of an eye. First, they're always showing 2 prices, a bid price, which is what they'll pay to buy shares, and a slightly higher ask price, which is what they'll sell shares for. Step 2, when you place an order, they just fill it instantly using their own inventory. And third, their profit is that tiny, tiny difference between the bid and the ask. That's called the bid-ask spread. It's pennies on each trade, but they do it millions of times a day. All right, so now we've met all 3 key players. You, the retail investor, the big institutions, and the market makers keeping the gears turning. So let's put them all together and see how this whole ecosystem really functions. And boom, this chart right here, this is probably the most important thing to understand. Take a look at the daily trading volume. While we hear a lot about retail trading in the news, the hard reality is that something like 90% of all the action, all the volume, comes from institutions and market makers. We, as retail investors, are basically small fish swimming in an ocean where the big whales create the currents.
So let's just boil it all down one last time. We've got retail, that's us, trying to grow our personal wealth, making a pretty small impact individually. Then you've got the institutions, the big guys managing other people's money. Their size means they can literally move the price of a stock. And finally, the market makers, the plumbers of the system, making their money on the spread and making sure everything flows smoothly for everybody else.
Okay, so if you're going to walk away with just 3 key things today, make it these. Number 1. The market isn't just one thing, it's a whole ecosystem with different players who all want different things. Number 2. The institutions, they're the ones driving the bus. They control most of the volume. And number 3. The market makers are the unsung heroes who make sure your trades actually happen the second you click the button.
So, here's a quick mental checklist to keep in mind anytime you're thinking about a trade. 1. Know your game. What's your goal as a retail investor? 2. Acknowledge the bigger picture. Remember that institutions are making the big waves. And 3. Appreciate the plumbing. Your ability to trade instantly isn't an accident. It's thanks to market makers.
So now you know who you're trading with. That's a huge piece of the puzzle. But it begs the next big question. Does the way you place your order actually matter? Does it change the game? Oh, absolutely. And that is exactly what we're going to get into next time. See you then.